Namaste and a very warm welcome to Cafe where finance meets innovation. I'm your host, and you're watching part 1 of our 3-part special series for April 2026 10 lakh rupees, the complete investment blueprint. In this first part, we are going to set the stage. We'll look at the global macro storm shaking financial markets right now: wars, inflation, geopolitical tensions, and RBI policy. We'll decode India's economic pulse. We'll understand exactly how wars impact your investments. And we'll look at a full asset class performance scorecard so you know which investments made the most money recently. This is the foundation you need before we get into the actual investment avenues in part 2 and part 3. So stay with me because by the end of this 3-part series, you will have a complete, actionable investment blueprint for April 2026. If this is your first time here, welcome to Cafe Hit that subscribe button and the bell icon so you never miss our weekly investment insights. And if you're coming back, thank you for your trust. Let's begin. Slide 1. The big question. Where should you invest 10 lakh rupees in April 2026? 10 lakh rupees. It sounds like a big number, but here's the truth. As per the SEBI Kantar Investor Survey 2025 and AMFI January 2026 data, the majority of India's retail investors fall in the 5 to 15 lakh investable surplus range. 10 lakhs is not just a number we picked randomly. It represents you, India's mass affluent investor class. Whether you have exactly 10 lakhs or 5 or 15, this blueprint scales to your reality. The principles are universal, the strategy is proven, and the sources RBI, Goldman Sachs, JP Morgan, AMFI, SEBI, IMF, World Bank, Motilal Oswal, HDFC Securities are the most credible institutions in global and Indian finance. Slide 2. The Global Macro Storm, April 2026. Let's start with what's happening in the world right now, because your money does not exist in a vacuum. We are living through one of the most turbulent macro environments in decades. First, the US-Iran war. Oil prices are wildly volatile, global supply chains are disrupted, and energy costs are surging, confirmed by Reuters, March 2026. Second, the Russia-Ukraine conflict continues to fuel a European energy crisis and a massive global surge in defense spending. Bloomberg, Q1 2026. Third, US tariffs are back. Trade wars are hurting Indian exporters, especially in textiles, seafood, and auto components. Deloitte India Economic Outlook, January 2026. Fourth, the Indian rupee has crossed 90 rupees to the US dollar, a historic low, and foreign portfolio investors have pulled out nearly $18.4 billion from Indian markets in 2025. RBI MPC statement and Deloitte. Fifth, a global rate cutting cycle is underway. The Fed and the RBI are both easing monetary policy, which is actually good news for certain asset classes. As per a Reuters poll from January 2026, the RBI is expected to hold at 5.25% through 2026. And sixth, as per the WEF Global Risks Report 2025, 75% of global executives cite geopolitical risk and macroeconomic turmoil as their top concerns in 2025-26. Globescan and WEF. Understanding this storm is the first step to profiting from it. Slide 3. India's economic pulse. Despite all this global turbulence, India's story remains remarkably resilient, and that resilience is backed by data from the world's top institutions. The RBI has revised India's GDP growth forecast upward to 7.3% for financial year 2025-26, confirmed by both the RBI MPC and the World Bank, February 2026. Goldman Sachs forecasts India's real GDP to grow at 6.9% for calendar year 2026. Goldman Sachs Research, February 2026. The IMF projects India's growth at 6.4% for calendar 2026. IMF World Economic Outlook 2026. The RBI held its repo rate at 5.25% in February 2026, maintaining a neutral stance. RBI MPC, February 2026. India's mutual fund industry AUM has crossed 82 lakh crore rupees as of February 2026, AMFI February 2026, and individual investors alone hold 49.56 lakh crore in mutual fund assets, AMFI January 2026. However, the rupee weakness at 90 rupees per dollar and record FPI outflows of $18.4 billion in 2025 remind us that India is not immune to global pressures. The smart investor understands both the opportunity and the risk. Slide 4. The war effect on your investments. War. It sounds scary, and yes, it is. But for investors, every crisis also contains hidden opportunities. Let me break this down clearly. When wars escalate, certain assets absolutely fly. Gold and silver surge as investors flee to safety. Defense stocks, companies like HAL, BEL, and BDL, see their valuations skyrocket as governments worldwide increase military budgets. Oil and energy companies benefit from supply disruptions, and pharma, being a defensive sector, holds steady through crises. But not everything rises. Equity markets see short term panic selling. Aviation and tourism get hammered. Auto and consumer companies face supply chain nightmares. And emerging market currencies like the rupee face capital flight pressure. As per the WEF Global Risks Report 2025, 75% of global executives cite geopolitical risk as their number one concern. The BlackRock Geopolitical Risk Dashboard confirms that market attention to conflict risk is significantly above its 5-year historical average right now. The key insight? Position your portfolio before the crisis fully plays out, not after. That is exactly what parts 2 and 3 of this series will show you, in complete detail. Slide 5. The Asset Class Performance Scorecard. Now let's look at the numbers, because data doesn't lie. Over the past 5 years, which asset class made Indian investors the most money? Gold delivered a staggering 125% return over 5 years, and in 2025 alone, gold gained 39%. MCX and AMFI, January 2026. In April 2026, MCX gold is trading at a record 1,54,200 rupees per 10 grams, 5 paisa and MCX. The Nifty India Defense Index surged 59% in 1 year. Economic Times and NDTV Business, March 2026. Equity mutual funds, especially multi-asset allocation funds, delivered 15 to 23% in 2025. AMFI and LiveMint. Goldman Sachs has set a Nifty 50 target of 29,300 by end 2026, implying 14% upside. Goldman Sachs Research, Reuters, November 2025. SEBI reclassified REITs as equity from January 1, 2026, adding a new growth dimension to real estate investing. SEBI Circular, November 2025. And PPF at 7.1%, NSE at 7.7% remain the safest options. India Post, Ministry of Finance. The lesson is crystal clear. Diversification across asset classes is not optional, it is essential. And that brings us to the end of part 1 of the KFinova investment series, April 2026. In this part, we covered the global macro picture, the wars, the RBI policy, India's economic pulse, the war effect on markets, and the full asset class scorecard. Now you know why you need to invest differently in April 2026. In part 2, coming up next, we dive straight into the 8 specific investment avenues: equity mutual funds, direct stocks, gold and silver, defense stocks, REITs, fixed income, sovereign gold bonds, and debt mutual funds. Each avenue comes with a specific rupee allocation out of your 10 lakhs, verified data sources, and clear action steps. If you found part 1 valuable, please hit the like button right now. It genuinely helps other investors find this content. Drop a comment below telling me what is your current biggest investment concern: gold, equity, or the rupee weakness? Subscribe to KFinova at KFinova on YouTube and follow us on Instagram at KFinova for daily finance insights. See you in part 2. This is KFinova, where finance meets innovation.